Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
The Australian dollar remains under pressure after weaker than expected GDP data reinforces expectations that the Reserve Bank of Australia could begin easing policy sooner than anticipated after much talk recently of a rate hike, now looking for a possible rate cut, with chances now of 50 to 60% of a 25 base point rate cut in April. According to the Australian Bureau of Statistics, the ABS, the economy expanded by just 0.3% in the fourth quarter of 2025, missing forecasts of 0.5% and with the previous coming in at 0.9%, while annual growth slowed to 1.8% from 2.1%. The disappointing growth figures have lifted market expectations for lower interest rates. So then let's see, as Governor Michelle Bullock continues to stress a data-dependent approach, another softer growth reading could further strengthen the case for policy easing. Attention now turns to the US, with the main data looking to the US non-farm payrolls report, which could ignite further momentum. Meanwhile, turning to the technicals, we can see that the buckled RSI and also the weaker MACD could give further weakness towards the level of 71.5 or even lower to 70 or 70.85 around this area here, and then expect a correction. Turning to the euro, the market's weaker as the dollar performs in a slightly better manner after reports that Iran could suspend negotiations after the Israel's military action in Lebanon driving demand for the safe haven US dollar. Looking at the current technical pattern, we can see it has buckled rather significantly and therefore could look to move to around 115.65, but I prefer it lower to around 115 and then possibly getting a correction back to 117 to about 118. Dollar yen, well, there is much fear now that there could be a potential intervention as the market pushes higher, and you can see here the market was a little bit rattled today and the technicals are breaking down. I am still a bear and I'm waiting for one of these candles to come through and drop towards 158.5 to around 157, wiping out all these gains once again and also a bull trap. Turning to sterling, you can see the market was a little bit weaker, and I still feel technically that we could see the market move towards the bottom side of the range around 133 and reassess from there. If we do get the bottom side of that range reached, a bounce is expected. Another weaker play for gold as it now heads closer towards the target, seen around 4,445 or lower to around 4,420, but towards this zone here it did find demand and may do again, but for the moment it is weaker. And wrapping up with oil, another rally after responding from the lows around that $84-85 and now looking back to, as I mentioned before, around 96 to 98, but still creating this noise and moving sideways as there's much tension overseas to the geopolitical risk. Well, that's a wrap. Thank you for joining me. As always, look at the intraday report. I hope you enjoyed a great start to the day.